If you're watching this video, this is the time for you to start investing. Too many people think that they need to wait for the best moment, hold on to cash, and try to learn everything about the market. But in reality, waiting is costing you more than you think. Starting today is way easier than ever, and in this video, we'll talk about why owning an asset, even the small ones, is way better than sitting on cash, and why your future self will thank you for making this first step. If you're new here, my name is Ron. Welcome to Pinoy Stock Investor. Let's address the biggest myth. Waiting will make things easier. Maybe you're waiting for the market to drop, or you need a lot of money to start. But every moment you wait, you're missing out on time, and time is the one thing that you can't get back. Why? Because of compounding. When you start early, your money has more time to grow exponentially. But when you delay, you're losing years of growth, and it becomes much more hard to catch up later. As Ken Fisher said, time in the market beats timing the market. This could be more true. It's all about letting your money grow over time instead of trying to predict the best entry point. Let's put this into perspective. Imagine planting a tree. If you plant it today, you'll enjoy the shade and the fruits years later. But if you keep procrastinating, saying that you will plant this next year, you'll be pushing back the rewards. Investing is the same. You need to plant your financial seeds now to reap the benefits later. The good news, investing has never been more accessible. Today, you can start with as little as $50 using apps and platforms that makes everything beginner friendly. You don't need to be a stock market expert to get started. But here's 3 reasons why starting with even a small portfolio is better than holding cash. Assets grow while cash loses value. Inflation erodes your cash's buying power over time, meaning your $100 today won't buy the same amount of goods 4 to 10 years from now. On the other hand, investing in assets like stocks, ETFs, index funds, and even real estate offers the potential for growth and helps your money work for you. Even with a modest 5% return over time can outpace inflation. Starting small allows you to learn how the markets move and develop confidence. You'll begin to understand key concepts like diversification, dividends, and compounding without risking large sum of money. When I started, I knew little about sectors or industries, but as I invested, I naturally learned about different companies and how they operate. You don't need to master technical analysis right away. Start simple, and your knowledge will grow over time. Lastly is building momentum. The hardest part of investing, or anything actually, is getting started. Think of it as pushing a snowball down a hill. It starts small and slow, but it gains size and speed the further it goes. Once you've made your first investment, you'll feel a sense of accomplishment that motivates you to continue. Now, let me show you the real impact of starting small. Here's how my portfolio worked for me this past December. Starting with SCHT, this is one of the highest dividend that we received last December, which is $80.49. Next is Google. They recently started paying dividends, and we received $8.41 last December. Next is the monthly dividend paying company, which is Realty Income. We received $27.05 last December. These dividends have been reinvested back to the portfolio, and we actually generated some gains from it. Okay, continuing on, we have Microsoft, which gave us $33.10. We also have Visa, which paid us $12.02. And lastly, the highest dividend payment that we received last December is from S&P 500 VOO. This ETF provided $171.60. If we compare these dividends to the first one that I received back in December 2019, I earned a total of $10.80. That $10.80 now earned more than double. These dividends are proof that even small investments create passive income streams that grow over time. I've been reinvesting these dividends year over year, and this strategy compounded the growth in my portfolio. So what's stopping you from starting to invest? Is it fear of making a mistake or losing your money? Here's the truth. No investor gets everything right. Not even Warren Buffett. Mistakes are part of the investing journey. The key is to learn from them and keep moving forward. Let me address another common concern: uncertainty about the market. Yes, the market fluctuates, but the long-term trend has always been upward. Historically, the S&P 500 has returned an average of 7 to 10% annually, even accounting for recession and market crashes. Starting now allows you to benefit from this long-term growth. Owning assets is the first step to building wealth. It doesn't matter if it's $10, $100, or $1,000. You need to start somewhere. The biggest mistake that you can make is to wait for that best moment, because there's no such thing. The market will always have its ups and downs. Timing it perfectly is close to impossible, even for the experts. Going back to that plant analogy, waiting for the right time is like standing on the field with the seeds in your hand, watching the seasons change without planting them. Let's look at the numbers. If you start investing $100 a month at an average rate of return of 8% annually, within 30 years, that small investment will grow to over $136,000. That's the power of compounding. But if you wait 10 years before you start, you'll lose about $60,000 of growth. Every dollar you invested today is working for your future. Small sacrifices like skipping a fancy coffee or dining out less often can fund your future wealth. What feels like a small inconvenience now will feel like a blessing years from now when you see how much your portfolio has grown. The best day to start was yesterday. The second best day is today. And each day you wait is a missed opportunity. Compounding works best when it has time on its side, and starting now ensures that you give your investment the maximum time to grow. You don't need to know everything about investing to start. The fundamentals, owning assets, building a portfolio, consistently contributing come first. The analytics, market research, and strategies, those come after as you gain experience. One of the easiest ways to get started is to automate your contributions. Set up a recurring deposit in your investment account. This way, you're investing without even thinking about it. It's like a way of paying yourself first. But none of that matters if you don't take the first step. Start small, start simple, just start. And as you grow your portfolio, you'll increase your confidence too. If you get value in this video, don't forget to subscribe and like this video. Let me know in the comments, what's your first step going to be? Let's see if everybody have the same first step as yours. And if you want to see how I invested $100 every day, you can watch this video. I hope you enjoyed this video. Have a great day.